Insider Trade Review Series. This is SMED on April 8th. Our entry here is 788, our stop is 621, and the overall pattern that we're looking at is after moving to new highs, the stock pulls back and is potentially continuing its new uptrend. So let's see what happens. Okay, so not stopped out on this bar here. Could easily have been, depending upon where I had adjusted my stop. If I were trading this now, I probably would have pretty aggressively adjusted my stop to closer to beneath this little consolidation and been stopped out in the middle of this bar here. But let's keep going. Yep. All right, and we're stopped out the next day. So after this wick here and a close just above 7. I adjust my stop up. This isn't the kind of action that you want to be seeing, but it's also not always a reason you want to get out of some of these volatile stocks, because you can do things like this and then just be higher the next day. All right, that's a 0.7R loss on SMED. Let's move on. Okay, this is HEAR here on April 9th. Well, stock's been in a downtrend. Rallies, fails, and then it kind of doesn't really keep going down. It looks like it might be starting to make a higher low, and then after this sideways consolidation and this little breakout here, it's basically a failure to fail, if that makes any sense. So it's failed to resume the downtrend, and we might be starting a new uptrend. So let's see what happens here. Our entry is 677, 678, and our stop is down at 537 down here. Okay, let's see what happens. So far so good. Okay, took our first sale at 750 with just over 0.5R. And wow, okay, yeah. All right, we get flat after this gap up at 977. All right, so that's pretty good. What is that? That's a 1.3R winner. All right, let's move on. Okay, this is KALA, Kala Pharmaceuticals, on April 13th. Now, the first thing that will probably stand out to you is just how tight the stop is on this trade, which we'll get to in a second. The pattern's a pretty classic consolidation near highs, followed by a breakout bar. Now the stop, I think I was trying to get a little too cute with this trade and treated my entry almost as a day trade. So if we didn't close higher than the entry, so I should mention the entry is 929 and the stop was 849. If the stock hadn't closed higher, I would have just gotten out of it, even if it wasn't the 1R loss, just because of the gap risk. And honestly, like even here, the gap risk on this was probably a little too much, but I was, like I said, trying to catch a move with some greater size. So let's see how that plays out. Okay, we have our first follow-through bar here and take profits at 966. This sale is basically just to cover risk. So now my stop is just around break even, and I just want to let it go and see what happens. And you can see a few days later, stopped out just around our entry price. So this trade is mildly positive, like 0.2R winner. Yeah, in hindsight, not the best way to manage the trade, especially considering it would have worked out had I managed it with the looser stop. Maybe something that's important to go over here is just sizing your trades so that you'll be able to maximize your ability to hold on to them for the move required to be profitable in the long run. And it could be easy to kind of fall into the mentality of let's say you're getting into a swing trade expecting, or with $2 risk, so you want the stock to move at least $2 in your favor to take profits, and you think to yourself, well, I'm getting in 20 cents or 40 cents in my favor is all but guaranteed, so I'll just really size up, and instead of making my whatever 1 hour target at $2, I'll make it at 40 cents, and then I can take the trade off there and hold the rest for an even bigger move in my favor and make a ton of money. Well, it doesn't always work out that way, because as you see, you have to be able to absorb natural pullbacks, which can be very difficult if you've oversized a trade versus the pattern you're holding on for. And I think this is a clear example of that. So, okay, let's move on. All right, this is ALT on April 16th, and after a very strong gap on this day, we've had this wide range, messy consolidation, almost kind of a bull, and on the 16th it looked like after taking out this previous little pivot there, we might be starting to go higher. So what we're looking for, if you imagine this day of entry as a green bar, it looks like there's a good chance, this thing could have closed at 4, right? So our entry is 359 and stop is down at 259. Let's keep going. Okay, and we just kind of trickle down and get stopped out for about a 0.335 our loss, which isn't much. Is this the best stop? Looking at it now, it's probably a bit tight, and then especially considering I know what happens on the rest of this chart, it's a bit painful, which I'll show you. Yeah. Oh wait, there's more. The thing goes all the way up to 30, it 10x's basically. To hold on to a move like this, you wouldn't with this kind of swing trading. It would have been several trades. Just this here to there's like a 50% pullback you'd have to sit through, but reasonably this could have been a 2 plus our winner. This is the kind of move that I was looking for on this entry. Just was a little too soon. Why didn't I get back into the trade? Well, probably had enough other trades on that I didn't want to be adding more risk at the time, which is something to consider in your own trading. What trades are you taking or not taking based on how much exposure you have? So sometimes, and actually that might have been the case here, I don't detailed enough notes, but maybe I was a little bit premature taking this trade off just to make room for some other opportunities, which doesn't look that good, but it might have been the right decision at the time. Okay, let's go on to the next one. Okay, and finally today we have MR on April 20th, 420. This is a pretty classic bull flag and breakout here. Entry is 428 and our stop was exactly $1 below that. So the day of entry closed very strongly, and we have a very happy next few days. And first sale is taken on the 23rd at 587. I only took a quarter off there, and the following day got flat at 637 there. That's a 2R winner, so that's all in all a pretty good trade. Not much to talk about after that. The winners are always simple. So at this part in the process, still figuring things out a little bit, still playing around with stop placement and when and how to take profits. Thanks for watching. We'll see you in the next video.